Hi everyone, it's Marissa here from Rise High and I'm joined by the wonderful
Lachie Turner from Turner Real Estate.
And of course we're here today to bring you the quarterly Adelaide property market update as we do every quarter, and it's spring, Lachie.
Spring has sprung.
Starting to get warmer.
Spring has sprung, it's starting to warm up, and certainly nationally there's actually more houses for sale.
Yes.
And the national growth actually for the last month was only at 1%. So one of the reasons for that is perhaps the demand is being filled a little bit, sort of on average across the national level, but South Australia for last month went up another 4%. So it's still, Adelaide is one of the strongest markets in Australia. So stock level's still a little bit low, but they do improve a little bit once we start to hit spring, which is formally, if you look at seasons, the beginning of September. But the spring selling season really seems to start more around October. Or mid-October, which is right about now. So a good chance for buyers that have probably been waiting for ages to wait for more stock. There should be a fair bit more on the market leading right up to the Christmas period now.
And I think, spring is traditionally a time when we do see more stock come to market and there is a bit more selling activity. I think historically we sort of see that generally.
Yeah.
It's good to hear that there is a bit more supply, a bit more stock in the market, because that's been a problem for the Adelaide market for a long time now, which is really what's driven the massive price growth that we've had in the market. Given that, we have seen that increase in stock, but compared to spring in previous years, pre-COVID, how does it compare? Are we still quite low on the stock levels? Are we still quite low on the supply side? Or is it starting to get back to normal levels? What are you seeing?
Unfortunately, it's not coming back to normal levels, and the stats we get often use the 5-year average, and we're still like 30% down, like the 5-year average of stock.
Wow.
But look, because it's been so many years now where the stock levels are lower, and the spring period doesn't seem to spring as much as it used to in terms of really high volumes. It's certainly percentage-wise a slightly higher volume over these months, and certainly nationally probably more than Adelaide. It is still quite low stock levels, but it's an improvement, and for buyers out there, I think now's really the time to start looking. There certainly will be, this will be the busiest period in terms of the amount of properties for sale, really for the whole year. And then it'll be really quiet. It'll be very active right up to Christmas, and then the stock levels will start to enter the market again probably around the third week of January. So if you don't get in pre-Christmas, there'll be 2, 3, 4 week break, and then it'll slowly start to creep back up again.
I think, what we've seen over the last 2 years is that buyers have been waiting for the market to settle down. So obviously we've had that massive growth, and it's been going for quite a while now. And as you've said, we're still growing. Adelaide's still growing. The last
4%.
quarter we had another 4%. And it's just, I think for buyers, they're getting that fatigue in terms of when is it going to sort of stabilise. We are seeing in other states it has sort of stabilised or come down, and there's been a lot in the media lately about the fact that Adelaide's median house prices has overtaken Melbourne's.
I mean, I guess
crazy.
It's almost 900,000 now. So
which is really bizarre. But I mean, we're still seeing from our perspective huge interest from interstate investors investing in the Adelaide market, because the rental yields are so good and they're still really affordable properties when you compare it to the other states, even though our median house price has gone up. So I'm curious to hear from you, like, where do you see it all going? Like, what advice would you have for buyers and sellers in terms of what the future might look like? Because we are sort of, if I can be honest, the growth has continued far beyond my expectations in terms of time frame. I don't know how you feel, but it seems to be going for a long time.
Yeah, well, I was having a bit of a chat to my wife about this last night, and if you look at a natural market cycle, I got some data yesterday as well that property prices over the last 4 years to build a property, so building values, have increased by 41% in 4 years.
The cost of construction.
So that's interesting. And then my wife was thinking, oh, well, does that mean it's going to go down a bit now, or it's going to stabilise? Well, probably not. It's probably the new normal now. I think what's going on there. But if you're a young couple or a buyer buying a home in the Adelaide market right now, I would say now. Go for it now, because we sell 350 houses a year here at Turner Real Estate. We see trends and behaviours and so on. There's still strong interest. The average days on market is still 3 to 4 weeks, but there's not as many buyers feverishly out there. So they're out there, but we're getting, say, maybe 1, 2 or 3 on average, not 15. So it's probably not a bad time. The other thing why it's probably a good time, well, both for investors as well, is because it is anticipated, and you'd be more the expert on this, Marissa, that there'll probably be an interest rate drop, most likely at the beginning of next year. US have dropped their cash rate, UK, Australia will generally follow that. Inflation is now down into the target range, which is what the RBA has been obsessed about, and they seem to have been successful doing that. So if that stays down, inflation stays down, we will see an interest rate rise early next year. What's that going to do?
Interest rate drop.
Drop. Actually, I did that at an auction once. I said rise. I meant drop. Interest rate, thank you. Drop. What's that going to do?
Yes.
Add to the buyer interest. So, and I often talk to buyers over the years, I'm going to wait. I think this might happen, that might happen. I would just probably be pretty active right now.
Yeah, I completely agree. And, you know, the buyers that are waiting for the market to stabilise, the fundamentals just don't support that it will. Because like you said, you know, we're expecting potentially a rate cut early next year.
Undersupply is chronic.
Undersupply is chronic. Demand is still really strong. Migration's still really strong. Like, it just, the fundamentals are supporting continued growth in the property values, aren't they?
Yeah, you're right. And look, it is excellent for investors, and fascinating to hear your insight as one of the largest lenders in South Australia, that there are so many active investors. We're seeing that too. We're adding on average about 30 new investors with properties to manage for them every month.
Wow.
Which is actually quite a bit. It's been a little bit low over winter, but it's just starting to pick up now. So we're expecting to probably add 30 to 40 a month now, which really speaks volumes really of how investors are feeling about Adelaide. Still relative affordability, but great yield. So that's still there as well, and I can't see that changing either.
Let's talk about rentals, because as well as the increase in house values, we also have seen a massive increase in rental rates, rental yields. What do you see happening in that space? As you said, you're one of South Australia's largest property managers, so you have good insight. I know that I think last time we met, you said, okay, the increase is starting to slow, but from where I'm seeing with our clients, it is still strong. You know, they are still able to increase their rent at every renewal. And I'd be keen to get your insight into where are we going with rents? How is that going? What are you seeing? Yeah, look,
definitely. It's actually a bit of a three-speed market actually with rents. So, and a lot of it is actually to do with affordability of households. So, anything that's up to sort of $400 or $500 a week. We are getting a lot of applications from tenants, but to the quality, sadly, is very, very low. Okay. So they don't have, the references, they don't have the income to support the applications. But there are a high number of applications, but the quality is low. Probably the strongest band where we're still seeing like lots of applications that are of a decent level are between that sort of $500, $600 and $650 a week. Okay. That would probably be the strongest part of the market. Once you get sort of that beyond 7 and 8 and up, weirdly, because you've got people that can't afford it, then we got those. Then we got the prestige properties we manage, which are generally from $850 upwards a week. We're leasing those within a week or two. So there's the haves that have got the money, and then the have-nots. But probably the strongest band is that sort of $500 to $750 a week. Where's it all going? Well, we're already seeing a decline in rents. In fact, in the South Australian...
Oh, like rents coming down?
Rents actually coming down, which has been on the cards for quite a while, because we've seen behaviours happening that would indicate that they are going to come down, but the data's finally come through. So what are we now, October? So for the month of September, the median rent for both houses and units actually went down. Houses went down 0.6%, and units I think a little bit more than that. I'm looking at Nathan here because he was helping me with the stats on that yesterday. So they have gone down a little bit for the first time, probably in years, I would say, since COVID. So
that's coming off such a high base.
But that's coming off a high. So as I was going to say, they've risen by 30% minimum. That value is still in there, but now they're starting to slightly come off. We are also finding if landlords are reading media and hearing a narrative of rents are going crazy, Adelaide's going crazy, and they're sort of hoping for a higher rent, and it's like categorically they will not let their property. It's still got to be at a value where the market is seeing, a decent rent level. Otherwise, it'll be vacant for a long time. Yeah. So you've got to be careful. It's not a, it's not a never-ending rainbow of high rents.
And the last time I caught up with Emma actually to do a quarterly market update, because you were away that day, we talked about the changes to the legislation for property managers or for landlords in Adelaide, landlords and tenants, things like the pets and, you know, making it a bit harder to, you know, evict a tenant. Has that had any impact from what you can see on, you know, investor interest in properties or tenant behaviour, or, you know, from where I'm seeing, it hasn't really had much impact, but I'd be curious to see if you have seen any impact as a result of those changes.
Look, I must admit, I haven't seen a huge impact, yeah, I'm always hearing what's happening. Obviously, the houses we sell every year, we sell some of our properties off our rent roll and with tenants, and it's been fine. I think people always freak out when there's new laws, and you know, there's a bit more benefit to tenants, which can be a good thing, both with pets and so on, and also marketing. You know, if a tenant doesn't want photos taken of their property, well, then we are a little bit restricted there. But you know, probably, you know, the laws and, you know, the media around it and the feeling around it is probably actually a lot worse than what it is actually in reality. It just seems to be business as usual. Yes. I think dangerously that, you know, the narrative can be negative and it can spook investors, and we've probably, to be honest, seen a little bit of an effect of that, where it's like, it's just too hard. But in reality, as I said, we're still attracting 30 odd investors a month, and we're just one agency in South Australia, so they're still active, and it's not really having much of a bearing. Negative gearing is just totally off the cards with the current Labor government. You know, the Treasurer shut that down last week and said it's just not on our policy agenda at all. So the Greens like to bring that up every single time. You know, it's hard because if you remove that, it just makes properties more expensive.
That's
and it doesn't really help anyone.
And like you've just explained, you know, the supply side for affordable rentals for tenants is already too low. So, you know, the government making legislative changes that would make the tax benefits less attractive for investors would actually cripple the economy in terms of...
What's actually fascinating is that there are, if you look on realestate.com.au and you look for properties available for rent in South Australia, there are hundreds of them. And the fascinating thing is that we talk about an undersupply, which is why, and we're trying to make it easy for tenants, but actually what's going on is actually an affordability problem. It's not so much that there aren't properties for rent and that's driving up prices and landlords hold all the cards. It's actually an affordability problem because people can't afford the new rises in rent, which is, as I said, going up at least 30%. That's actually really what's going on, I think.
Yeah. So just to sum it up, we're sort of out of time, but good time to buy?
Well, look, it's never a bad time to buy. Marty, one of our auctioneers, always says the best time to buy a property is yesterday. Yeah. And I think he's right, because there doesn't look like there's going to be sort of any effect on values into the future of any significant way. So
for those that are expecting, waiting for a drop in market values in Adelaide, they're probably going to be disappointed.
Well, look, if it's really highly anticipated because inflation's now down in the target range, and other major economies have dropped interest rates are probably going to be dropped here, which is always a stimulator of the market.
So we're thinking, you know, values are going to keep rising.
Moderately, they will. I mean, 4% last month. The national average is 1%. South Australia just seems to be highly attractive to all types of property buyers, investors and homeowners and so on. So, you know, there'll be growth. We're anticipating a bit more moderately. 4% is amazing for September, but so that's where it's just going to keep on moving.
We might finalise it with just quick tip for buyers, quick tips for sellers, and quick tip for property owners.
Well, I think the first thing about when you want to buy a property is being aware of what properties are for sale. And I've said this often in other market updates, but the best tip is to honestly just be buy ready, which means have a chat to Rise High and get your money sorted out so that you can make the most of an opportunity when it's there, because you might have one open and there's 5 offers that are made if it's a private treaty, and the person that is decisive enough to make an offer and it's got favourable terms, might be subject to finance, which is fine. Yeah. You need minimum to be in that situation, or even be able to buy unconditionally, which is have confidence in your finance that it'll be approved. Very important. The other one, which is a fascinating part of the digital age we're living in, and probably the last point, is register yourself with agents like turnerrealestate.com.au and other major agencies, because a lot of us are putting our properties for sale and rent on our websites first. and we're often getting them sold, getting them leased before they're going on. There's only really two major portals.
Off-market purchases.
Realestate.com.au and Domain are the two, but a lot of them are just selling off.
Not even making it.
Yeah, and like REA are like worried about it. I asked them, a little while ago, what's your biggest business risk? He just goes, off-market sales. Off-market's a bit of a loose term. That's like strictly no marketing. You sell to your neighbour. But a lot of agent systems now are very, very sophisticated. I mean, we've got 17,000 buyers ourselves, and every property we list, they get automatically matched, and we do a lot of marketing around it to the neighbours where we generally find a lot of interest, and we're getting incredible outcomes just doing that. So do that, because you might be missing out, well, you are missing out on a percentage of sales, because that's very much the done thing now.
Awesome. Well, that is a wrap for our spring quarterly market update for 2024. Thank you, Lockie.
Thanks for coming in.
That's actually our last quarterly market update for 2024. Our next one will be in 2025, following the December quarter. So we will be back in touch with you then. But of course, if you want to reach out, get any information about any property that you're looking to buy, sell, rent, any question about property, finance, money, the team at Turner can help, the team at Rise High can help. We're here to support you in what you're trying to achieve. So please reach out and we'd love to help you. Thanks for tuning in, and we'll see you again next time. Bye.
Bye.